Hey, ever feel like your spare change is just disappearing? Like it's falling through the cracks of your wallet and vanishing into thin air? What if I told you that those little pennies and dimes could actually be the seeds of your financial future? That's the promise of micro-investing, the idea that you don't need a huge chunk of cash to start building wealth. And when it comes to micro-investing apps, two names often pop up: Acorns and Round. They both offer a super accessible way to dip your toes into the investment waters, but which one is actually best for you? That's the big question we're tackling today. We're going to dive deep into the nitty-gritty of Acorns and Round, comparing their features, fees, investment options, and overall user experience. By the end of this video, you'll have a clear understanding of which platform might be the perfect fit to transform your spare change into serious savings. Now, before we get into the head-to-head comparison, let's take a quick step back and understand why micro-investing has become so popular. Traditionally, investing felt like something reserved for the wealthy, requiring large minimum investments and a deep understanding of the stock market. But technology has democratized finance, and apps like Acorns and Round have broken down those barriers. The core concept behind both platforms is incredibly simple. They round up your everyday purchases to the nearest dollar and invest that spare change automatically. Imagine buying a cup of coffee for 1,250 Nigerian Nairas. The app would round that up to 1,300 Nigerian Nairas and invest the extra 50 Nigerian Nairas. It might not seem like much at first, but over time, those small contributions can really add up, thanks to the power of compounding. Compounding, in essence, is earning returns on your initial investment and on the accumulated interest. It's like a snowball rolling downhill, gathering more and more snow as it goes. By consistently investing even small amounts, you're giving your money the chance to grow exponentially over the long term. Now, let's get down to the specifics and pit these two micro-investing giants against each other. We'll look at several key factors to help you make an informed decision. First up, how do they actually work? Both Acorns and Round operate on the roundup principle we just discussed. You link your debit and credit cards to the app, and every time you make a purchase, the app calculates the spare change. Once those roundups reach a certain threshold, usually 500 Nigerian Nairas or more, the app automatically invests that money into a diversified portfolio of exchange-traded funds, ETFs. However, there are some subtle differences. Acorns offers a few different ways to invest. While roundups are their flagship feature, they also offer recurring investments where you can set up daily, weekly, or monthly contributions at a fixed amount. This allows for more consistent investing beyond just spare change. Acorns also has features like Earn, which partners with various brands to offer cashback rewards that are then invested. Round, on the other hand, primarily focuses on the roundup method. While it's incredibly straightforward and easy to set up, it doesn't currently offer the option for scheduled recurring investments directly within the app. This might be a consideration if you want more control over the amount and frequency of your investments. Next, let's talk about investment options and portfolio construction. Both Acorns and Round utilize ETFs, which are baskets of stocks or bonds that track a specific market index or sector. This provides instant diversification, reducing the risk compared to investing in individual stocks. Acorns offers a range of pre-built portfolios based on your risk tolerance and financial goals. When you sign up, you answer a few questions about your investment timeline, risk appetite, and financial situation. Based on your answers, Acorns recommends one of their 5 core portfolios: conservative, moderate, moderately aggressive, or aggressive. These portfolios are constructed using low-cost ETFs from reputable providers and are automatically rebalanced to maintain your chosen asset allocation. Acorns also offers a custom portfolio option for users on their higher-tier plans, allowing for more control over the specific ETFs included. Round also offers diversified portfolios built with ETFs. When you sign up, you'll typically answer questions to determine your risk profile, and they'll allocate your investments accordingly. While Round's portfolio options might be slightly less granular than Acorn's core offerings, they still aim to provide a balanced approach to investing. Now, let's address the elephant in the room, fees. This is a crucial factor, especially when you're dealing with small investment amounts. Acorns has a tiered subscription model. Their basic personal plan typically includes investment accounts, checking account access, and a debit card for a monthly fee. They also offer higher-tier plans with additional features like retirement accounts, IRAs, custodial accounts for kids, and more advanced educational content, all at a higher monthly cost. The flat monthly fee can be a significant percentage of your returns, especially if you have a smaller account balance. For example, a 2,000 Nigerian Nairas monthly fee on a 20,000 Nigerian Nairas balance equates to a hefty 1% annual fee. Round generally has a different fee structure. Instead of a flat monthly fee, they often charge a small percentage of your assets under management, AUM. This means that the fee you pay grows as your investment balance grows. Percentage-based fees can be more favorable for smaller accounts, as the initial cost is lower. However, as your portfolio grows significantly, the fees will also increase proportionally. It's essential to understand the specific fee structure Round employs in your region, as it can vary. Moving on to user experience and platform design. Both Acorns and Round boast user-friendly interfaces that are designed for beginners. Their apps are typically clean, intuitive, and easy to navigate, even if you have no prior investment experience. Acorns app is generally well regarded for its sleek design and educational resources. They offer articles and videos to help users understand basic investment concepts. The platform also provides clear visualizations of your portfolio performance and progress towards your financial goals. Round's app is often praised for its simplicity. The focus is primarily on the roundup feature and tracking your investment growth. While it might not have the same level of in-app educational content as Acorns, its straightforward approach can be appealing to those who want a no-fuss way to invest their spare change. Another important consideration is account types and additional features. Acorns offers a wider range of account types beyond just taxable investment accounts. Depending on their subscription tier, users can also open traditional and Roth IRAs for retirement savings, as well as custodial accounts, UTMA/UGMA, for investing on behalf of children. Their Earn feature, as mentioned earlier, provides an extra way to boost your investment contributions through cashback rewards. Acorns also offers a checking account and debit card that integrates seamlessly with their investment platform. With that said, thanks for watching, and until next time.